Hey, this is Wade. In this video, I want to talk about the main sources of loans for your real estate deals. So I want to talk about those, and let's dig into the content. Hey there, this is Wade Garrett. Thanks so much for finding me on YouTube, where I like to talk about real estate investing, self-storage, and creating passive income to retire sooner rather than later. And so in this video, I really want to talk about the main sources of where you're probably going to get your loans for real estate deals that you're getting. Okay. And before I jump into that, I just wanted to say, consider subscribing and hit that like button if you really enjoy this content, and comment and let me know if I'm hitting it on the mark, if this is something that's helpful for you. And if it isn't, if this kind of fundamental video isn't what you're looking for, let me know that too. And give me some feedback and let me know what you are looking for that would be beneficial for you. So I really appreciate if you could do that. Thanks so much. And so let me dive in now to some of this content. So basically, when I think about the different kinds of sources of loans, they kind of go in a tier, right? So at like the main level, you're paying probably the higher interest rate, and then as you go down, it becomes a little bit more difficult to find those sources. But if you do, you more than likely are going to be opening up your options and potentially paying a lower interest rate. So the first is kind of at the top, right? The top level is your banks, your major banks like Bank of America, or let's say that you do your banking at Wells Fargo. You do your banking there. These kinds of main banks, so they of course offer mortgages. So their rates are going to be a little bit higher, I would say, on average, than the next tier below that. So the next tier below that is a mortgage broker. So basically, mortgage broker, they are sourcing mortgage rates, the mortgages and their associated rates, and they're bringing that in-house. So they're seeing a wide spectrum of different potential mortgages, and then also, the kind of interest rate that and the terms that each of those mortgage providers have. So a broker is kind of bringing everything in to one place, and then they're presenting to you what the best deals are. And so I would say on average, these kinds of rates are going to be a little bit lower, than your Bank of America kind of rates, where you're really just looking at one financial institution and they're providing their rates to you. Okay. And then when you go a little bit deeper, you go and you hit warehouse lines. Okay. And so like a warehouse line is it's basically an even better deal on the interest rate and potentially on the terms. Usually these are better, than the main financial institution, better than the mortgage broker, because the mortgage broker is kind of the middleman. The warehouse line it's kind of like the originator of basically who the mortgage broker is contacting. Like, that's a way to look at it. Okay, so the warehouse lines, you really kind of have to figure out who those individuals are. Personally, I don't have any contacts for people that provide warehouse lines or they do those kinds of mortgages. I just have never met anybody that does that. But this is what I've heard, is that the rates are even lower, than what mortgage brokers can provide you. And then finally, another element of these kinds of loans are more of the short-term loans, and those are called like hard money loans. And usually those the loans are basically, they're looking at the asset, and they're not looking at all of your individual financial aspects. Like, for example, they're not looking at what your balance sheet is and all the assets that you have and what your credit score is. They're looking at what the property is valued at, what it would be valued at after it's been repaired, what it's valued at currently before repairs. And these hard money lenders, their interest rates are very high, and it's usually for shorter periods of time. So that's kind of like an extra type of loan that usually just investors are getting involved in. So you have to pay, a much higher interest rate for that. But additionally, you don't have recourse. They don't have. It's usually a non-recourse kind of loan. And I'm going to talk about that in another video. What are recourse versus non-recourse loans? But I just wanted to highlight those main sources of the loans that you usually are going to be getting for your real estate. Okay, so I hope that was helpful. If it was, smash that like button, and I can't wait to see you guys on the next video. Take care until the next one, and I'll see you then. Okay.